Get ready, markets are moving, deals are dropping, and we're bringing you the biggest stories impacting your portfolio. First up, PFA Pension Forsikringsaktieselskab just made a significant move, purchasing a whopping 2.3 million shares of Netflix. That's approximately $223 million invested in the streaming giant, making it their 18th largest holding. But that's not all. Vanguard, Baillie, Gifford, Jennison Associates, Sumitomo Mitsui Trust, and Nordea Investment Management have all been aggressively increasing their Netflix positions too, with some seeing increases of nearly 900%. What does this massive institutional buying mean for NFLX? Let's dive in.
Here's a simple way to protect your phone without stress. This ALEN 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Now, shifting gears, let's talk about Netflix's strategic push into AI. The company is acquiring InterPositive, a move that's got analysts buzzing about efficiency and content volume. The big question is, how quickly can Netflix integrate these AI tools into their production pipeline? Will it lead to a surge in original content and a boost to their bottom line? And crucially, does this signal a broader shift for Netflix, transforming it from just a streaming platform into a tech-driven entertainment powerhouse? Head over to Simply Wall-Sint for a deeper look at the potential impact. Next, Horizon Investments LLC is making waves, significantly increasing their stake in Netflix by a staggering 769%. They now hold 271,513 shares, signaling a strong belief in the company's future. But it's not just Horizon. Vanguard, Baillie, Gifford, and others are also piling in, reinforcing the sentiment that Netflix is a stock to watch. With institutional investors owning over 80% of the company, what are the key drivers behind this widespread confidence? Let's break it down. Finally, Robertson Stephens Wealth Management, LLC, has also jumped on the Netflix bandwagon, boosting their position by a massive 923.5%. This comes as Netflix continues to report impressive earnings, beating estimates by a significant margin. But before you invest, remember, top analysts are quietly whispering about 5 other stocks they believe are even better buys. Don't miss out. View the 5 stocks here. And for all the latest market insights and breaking news, subscribe to our channel, hit that notification bell, and stay ahead of the curve. Major institutional investors are significantly increasing their positions in Netflix Nasdaq, NFLX, signaling strong confidence in the streaming giant. PFA Pension Forsikringsaktieselskab recently purchased 2.38 million shares, valued at approximately $223 million, making Netflix its 18th largest holding. This follows substantial increases from Vanguard Group, Baillie, Gifford & Co., Jennison Associates LLC, Sumitomo Mitsui Trust Group Inc., and Nordea Investment Management OB, each boosting their holdings by over 800% during the fourth quarter. Institutional investors now own 80.93% of NFLX stock. Netflix reported strong Q1 earnings, exceeding analyst expectations with $1.23 earnings per share, compared to 76 cents projected, and $12.25 billion in revenue against an estimated $12.17 billion. The company's revenue saw a 16.2% year-over-year increase. Looking ahead, Netflix anticipates 78 cents earnings per share in Q2 2026. Several brokerage firms have reaffirmed their positive outlook on Netflix, with DZ Bank and Canaccord Genuity Group maintaining buy ratings and setting target prices of $125 and $120 respectively. Oppenheimer also assigned an outperform rating with a $120 target. While insider activity has shown recent sales, including significant transactions by Director Reed Hastings, these sales were executed under prearranged trading plans. Overall, corporate insiders hold 1.37% of the stock. Currently, NFLX trades at $92.06, with a market capitalization of $387.65 billion, and analysts maintain a moderate buy rating with a consensus target price of $114.82. Despite the positive sentiment, Channel YouTube highlights that Netflix isn't among the 5 stocks top-rated analysts are currently recommending to their clients. Netflix is making a significant move to bolster its efficiency and content production, acquiring AI firm InterPositive. The streaming giant, currently trading at $92.06, has demonstrated a strong track record with impressive returns of 185.2% over 3 years and 82.7% over 5, though it experienced a 20.4% decline in the past year. This acquisition underscores Netflix's commitment to technology investment, positioning it as more than just a distribution platform. Investors are keenly watching how quickly InterPositive's AI tools can be integrated into Netflix's production pipeline, anticipating potential improvements in operating efficiency and increased content volume. While the headline doesn't cover all positive developments, Netflix maintains a solid balance sheet and continues to adapt to the competitive landscape for viewer attention and manage rising content costs. For a comprehensive analysis, including fair value estimates and potential risks, consult the Simply Wall-St Company report. Remember, this analysis is for informational purposes only and does not constitute financial advice. Major institutional investors are significantly increasing their positions in Netflix Nasdaq, NFLX, signaling strong confidence in the streaming giant. Recent 13F filings reveal substantial stake increases from Horizon Investments LLC, Vanguard Group Inc., Baillie Gifford & Co., Jennison Associates LLC, Sumitomo Mitsui Trust Group Inc., and Nordea Investment Management OB, with some seeing increases exceeding 800%. Horizon Investments alone boosted its stake by a staggering 769.3%, acquiring an additional 240,279 shares valued at $25.46 million. Vanguard now holds the largest position, with over 390 million shares worth $36.57 billion. Netflix reported strong Q1 2024 earnings, surpassing analyst expectations. The company posted earnings per share of $1.23, compared to an estimated 76 cents, and reported revenue of $12.25 billion, slightly above the $12.17 billion estimate. Revenue was up 16.2% year-over-year. The company anticipates earnings per share of 0.78 in Q2 2026. Analysts remain largely positive, with William Blair reiterating an outperform rating and UBS, HSBC, DZ Bank, and Jefferies maintaining buy ratings, with price targets ranging up to $114. The consensus rating is currently a moderate buy, with an average target price of $114.82. Despite the positive outlook, recent insider activity shows executives selling shares. CEO Gregory sold 27,312 shares for $2.27 million, reducing his position by 18.27%, while CFO Spencer Newman sold 28,630 shares for $2.81 million, a 27.95% decrease. Over the last 90 days, insiders have collectively sold over 1.38 million shares, worth approximately $127.48 million. Founded in 1997, Netflix has evolved from a DVD rental service to a global entertainment powerhouse, providing subscription-based streaming of films, television series, and original content. The company's stock currently trades at $92.06, with a 52-week range of $75.01 to $134.12. Key financial metrics include a market capitalization of $387.65 billion, a price-to-earnings ratio of 29.74, and a beta of 1.55. Netflix Nasdaq, NFLX, is experiencing increased attention from both institutional investors and analysts. Robertson Stephens Wealth Management, LLC, significantly boosted its stake by 923.5% in the fourth quarter, acquiring 66,851 shares for a total holding value of $6,947,000. Other firms like First Financial Corp. IN, Die Nuzzo Private Wealth Inc., Turning Point Benefit Group Inc., Imprint Wealth LLC, and MB Levis & Associates LLC also increased their positions, with Turning Point Benefit Group seeing a massive 13,400% increase. Institutional investors collectively own 80.93% of Netflix stock. NFLX opened at $92.06 on Friday, with 50 and 200-day moving averages of $94.81 and $96.77, respectively. The company's market capitalization stands at $387.65 billion, with a price-to-earnings ratio of 29.74. Recent earnings, reported on April 16th, exceeded expectations at $1.23 per share, beating the 76-cent consensus estimate. Revenue reached $12.25 billion, surpassing the anticipated $12.17 billion, representing a 16.2% year-over-year increase. Netflix forecasts Q2 2026 EPS between 0.78 and 0.78, with analysts projecting $3.56 EPS for the current year. Analyst ratings remain largely positive, with J.P. Morgan Chase & Co. reaffirming a buy rating and Arete Research upgrading their rating to buy. Several firms have set price targets ranging from $104, Loop Capital, to $125, Canaccord Genuity Group, with an average target price of $114.82. The overall analyst consensus is a moderate buy. However, insider selling has been notable. Director Reed Hastings sold 420,550 shares for approximately $40.16 million, reducing his ownership by 99.07%, while David A. Hyman sold 5,727 shares for $464,230.62, decreasing his stake by 1.78%. Insiders have sold a total of 1,382,013 shares in the last quarter, representing 1.37% of the company's stock. Netflix, founded in 1997, has evolved from a DVD rental service to a global streaming entertainment leader, offering a wide range of content on demand.